All right. Hey, everybody. Welcome to week 250. All right. So we finally figured out how we could do a split screen for anybody that's joining us live. So thank you for doing that. Let's see how we're doing. Yeah, we got some participants going on online. That's a wonderful thing. So a little different format this time. So a shout out to Kara Taddeo, the proprietor of this very cool place. And we are in the karaoke lounge of Hamilton. Lots of cool places here in this event space. And we're glad that you guys made it through COVID. Because that was a tough time, and that's what launched this whole fun and frivolity, which was not a lot of fun at the time for anybody, but anybody that made it through it, congratulations. We started this thing because Adam said, "Hey man, we need to do 2 of these a week." I'm like, "Are you kidding me? Like, what are we talking about?" Because it's busy season, or now we call it peak season, at least at BGW. So he said, "Gary, I'm answering the same question 15 times a day. This would really help me because we are having a lot of business owners like y'all calling at us trying to figure out how in the world we're going to navigate all these changing things. Like nobody knew what was going on. We still don't today. And hey, guess what? We're in still a lot of change 5 years later. All kinds of stuff with tariffs and all kinds of stuff. So, congratulations to you guys for making it through it. As long as you guys show up, we're going to show up. So shortly after we started it, thank God we moved it back to 1 time a week because this is a lot of work. But then Jackson says, "Hey, would you guys like to have a legal on?" And I'm like, "I don't know, Jack." And Adam says, "We've done live fire with him. He's really good."
I thought you meant the first attorney turned us down, and then
Collective memory. I'm kidding. It's so it's been fun. So he's been along for most of the ride, really. And so here's the format for you guys. So anything is still fair game. We may need a mic being shuttled out into the crowd. So if you have a question that has to deal with taxes, business growth, M&A, or just legal non-advice, guidance. Yeah. Is that the appropriate? That's the guidance term. Okay. You can have some legal guidance, but it's non-binding. Ask us. But what we're going to do is the reason we have these DunKings rock, that means true. False obviously means false. Pretty simple. What we want is a little bit of our audience participation. And guess what? Online, we're going to do a poll around some of these questions. And so we want to see how you vote. We're going to deal with current events. We're going to deal with stuff that was kind of the top questions of the last year. And then we're going to either riff on a truism, and it'll be true. And then if that's the case, hold up the DunKings rock. That means true. If you think that we have given you a falsehood, then you hold up false. So that's what we're going to do. We're going to do that online as well. But before we do, is there anything that we need to talk about?
Did you want to go first?
No, you can go.
Yeah, so I've been waiting for a long time to give away another Jack gift card around. What movie was the Holly Smoot tariff discussed? Ooh, what do you got? Amen. Yeah, wait since the mid '80s to bring up Ben Stein and the Holly Smoot tariff. Something tariff. If you guys remember the scene when Ferris was getting sued.
New economics.
Yeah, something economics. So, obviously, the tariff thing happened last night or yesterday, and the so what I wanted to touch on a little bit was the tariff itself, or the tariff package itself. Kind of some of the theories around it, and then also the income tax. So I'll start with the income tax. And there's like, remember hearing one of the lines, hey, nobody remembers why we even have an income tax in the first place. Was one of the things that was said. It's like, well, it is the 16th Amendment to the U.S. Constitution, and I don't know. I checked, Gary. It's kind of hard to pass one of those things. So,
Yeah.
while the people that passed it are likely dead, since it did pass in 1913.
Well, some of them are still getting Social Security checks. Though. I'm just saying.
There's pretty record as to why. That's right. Thank you for that.
Was it not ever fully ratified?
Yeah, there's.
Later, sorry, personally, there's absolutely a case where someone decided not to pay their taxes and won on this, and then there's a memo where the IRS say you're not talking about it.
Can be true, can be not true. I don't know. All I know is that the theory at the time, the theory at the time was that tariffs just weren't a predictable source of revenue, and they needed a predictable source of revenue. Hence, the income tax passed. Fun side facts: at that point, there were only two rates, 1% and 7%, and 1% didn't kick in until you were over 100 grand in today's dollars, and 7% didn't kick in until you were over 16 million in today's dollars. So,
Rockefeller.
yeah, I mean, so that kind of was the good old days of flat tax. We're a little bit different from that at this point, but I think kind of the big question on everybody's mind, I think, to consider, it's like, what have you currently bought that now there's going to be a tariff due on it? If you're a business, that's gonna change things for you from a cash flow perspective, because I think the upside is that pretty much everybody, it doesn't matter what party you're a member of, generally knowing that some other country taxes our stuff on the way in, and we don't tax them on their stuff on the way in. Yeah, that, like, it's hard to disagree with that. Sucks. Like, that's crap.
Right.
And at the same time, how you solve for that, who knows? Because with the Holly Smoot tariff, we were in a trade surplus at that time, for the fun historians in the room, and it actually drove us into a trade deficit, which we've been in a trade deficit, I think, probably ever since then. As a thing. So instead of like, hey, you're right, we should probably lower our taxes, they raised them and then stop buying our crap. So hopefully that isn't the consequence now. But at the same time, I think the surprising factor for people is, like, this isn't sort of like, if you've ever had to pay a tariff, this isn't like, what I would say as your tax advisor, that's a problem for down the road. Like, we're going to kick the can. Here's a strategy we can employ. We're going to live to find another down. No, that crap's due, like, at the dock. So like you're writing a check today that you may or may not have been planning to write. So, like, regardless of, like, Walmart, hey, we're going to push this off, hopefully on some of our suppliers in China. Oh, thanks for that. Walmart, we're going to push this off, hopefully on some of our suppliers in China. That's not, like, for stuff that's already in transit, that's kind of not a thing. I mean, so I just think one of the questions on here was not going to be prepared. People need to be thinking through, how much of this do I want to absorb? How much do I want my suppliers to try to absorb this? How much do I want to pass on to my customers? Those are all relevant questions, but even more relevant is the proximity of some things about to show up, and I'm going to have to write an additional check that I may not have been prepared to write. Otherwise, I won't have a good to sell. And I think one of the things I'll say before shutting up and stopping being a Debbie Downer Jack, so Jack can break up a notch, is the whole pass it on to the customer. Eventually, people hit a substitution effect. If you remember your economics courses, whereby like Jack's an amazing attorney. We love Jack and are loyal to Jack. At the same time, if Jack came to me tomorrow and said, "Hey, dude, Good shoemaker, we're gonna have to raise our prices by 50%. Like at some point, I'm gonna say, perhaps, Gary, there might be another attorney out there.
Michael Zoom.
that we should consider that perhaps might be slightly less expensive for some of these non-critical items. That we're focused on. So just because we have had a lot of clients say, "Well, I mean, my contracts are clear; I can pass that price on to the customer." Blah blah blah. Blah. It's like, yeah, that's probably true, but at some point, if your competitor isn't doing the same or doesn't have the same cost structure, you might run into some substitution effect problems.
So everything he said, plus, so two things. One is that these tariffs, you see that they, if it's made in America, then you're good. You would be hard pressed to find something that is completely made in America, something of substance, machinery, whatever it may be. The interesting thing, I heard this morning, and as I've said before, if you want to get a broad perspective on what's going on in the world, that you should go to channel 114 on XM, which is Fox News, and then go to 117, which is MSNBC, in about 30 seconds of each other, and you'll get the same story, but from different perspectives. How wonderful the tariffs are, how horrible the tariffs are. So just doing that, but so all of us are going to be impacted, as Adam said, on these tariffs that are coming. Another interesting fact is that we are a service society, and professional services all the way down, and we become a community, a country that is very dependent upon what happens in other countries as far as manufacturing stuff. So it's going to be interesting. And then on the legal side of things, there's going to be legal battles all over the place, whether they're legit or not, and whether they're there for harassment value to harass the White House and others, or so it's just we're just at the beginning of all of the chaos. If you think it's chaotic now, this is just the tip of the iceberg and coming. So some good news: CTA, beneficial owner reporting, is still on hold for U.S. companies. So is that true? Oh yeah, true, not true. Yeah. Actually, you probably should do it sideways because we still, it's not dead. It's just dying. So we'll see what happens with that. But that's kind of something.
Okay, that's good.
Questions from the gallery. I'll be monitoring it with one good eye, and the other one that's still kind of coming back. And it's harder with these sunglasses on, I'm just saying. So anybody online, hit us up.
You can harass us in the chat like you normally do. Papa Joe normally does that.
Anybody locally here, questions that are on your mind that you want to talk about, because this is about you. Question.
And by the way, if you don't start asking questions, I brought the dad
Oh,
joke.
no.
Well,
Please,
so
please.
bring it, or I'm bringing it. At anything.
I did see a study about dad jokes, and something about, I sent it to you.
Yes.
Wasn't it like kids are better adjusted when they have dads that are doing dad jokes, something like that?
I think that's more theoretical than actual, at least for Scuderia Sant'Agnello. So, yeah.
I got a question for Jack. So, hit on the tariff theme.
Can you,
I bought something, it had a contracted price, and now it's subject to a tariff. And at the same time, I've got a contract with my customers that had a contracted price that I'm now paying a tariff on. Like, what, can you kind of walk us through the mechanics of well, in this scenario, if your language read X, you'd have a dog that would hunt, versus in this scenario, you're pretty well screwed. On that one.
So interestingly, I was reviewing a contract last night, and it was about price changes and fluctuations. And the argument back and forth with opposing counsel has been, and this is a an attorney in the UK, has been, well, we're not going to agree to provide you notice of price changes. So I said, 60 days at least, and they keep deleting it. And so finally I went back to my client and said, I am not going to continue to engage in putting something in, taking something out. I'm stopping, tell them to try again. We're not betting against ourselves. This is ridiculous. And so the other side came back and they put 30 days, which at least gives you a little bit of wiggle room. So many contracts, because it's in the boilerplate, well, a couple of assumptions. One is that because it's a set price or says it's a price, that you think that if the contract goes for 12 months, that it's going to be, the prices are going to be good for 12 months. What you may miss in the fine print is that they are able to make modifications to the pricing structure. And a lot of times you'll see it not embedded in that any increases in their costs can cause an increase in the price that they sell it to you for. And then you can do whatever you want on whatever price you want to sell it for. And so that's, reading through in between the lines, that's really what's happening in these contracts. And so you really need to look at what the ability is within the contract. And like I said, many times it's silent. And so they have the ability to make modifications and mask it in costs, whether it is shipping costs or anything else that they pass along to you, and you have to kind of take it or leave it. A lot of times at time of renewal, so if you're stuck with what you have, a lot of times at the time of renewal is a good time to look and see those provisions that are going to, and there are a lot of people that are now, as of when the announcements of these tariffs are coming back, looking at their contracts to see where they can fight back, and because of all this that's going on. And so there will be, in addition to litigation within the governmental regime and kind of circles of influence, you're going to have private actions of suppliers to wholesalers to retailers with these price increases that they're going to say, well, that's not what we meant when we said that. We didn't mean for you to pass along those kind of charges. We meant that if, for example, let's say that you were shipping out of Charleston and there was an incident like the bridge. It was in Baltimore, right? Baltimore. Yeah. Okay. So in Baltimore, that happens. Okay. That is something that may be permitted to be passed along. And that was the intention of doing that, but not for increase in prices via tariffs, because depending on your perspective, it's a tax on top of the goods. I mean, that's really what it is, essentially.
So let's say that this happens. I get my bill for my import duty, and I pay it because I actually want myself to be able to sell it. And then a judge somewhere issues a blanket national injunction saying, you bypass Congress, you can't do that. I don't agree that this was like a threat of war or whatever, presidential power thing is associated with tariffs. Like, what can I do that? Like, can I get my money back?
Yeah, you're going to have to fight for that one.
Yeah.
And so, a kind of middle ground is you can negotiate. It just depends on who has higher negotiating power. So I would say if you are the one paying, then maybe you put money into an escrow. So you put an escrow, form an escrow account with Citibank or some other bank, and or even with legal counsel. So when people park money with us and it's pursuant to a true escrow, and let's say we represent a seller and they dump $100,000 in escrow as part of the purchase price and part of the contract, I can't, even if my client, the seller, says, give it back to me or else, I'm not giving it back to you, because I have a different duty to the transaction and parties than I do just to the seller. So, but that's an opportunity to say, okay, I'm going to pay you what you're owed, but I'm going to put this money in escrow. Problem with that is, as you said, it's due when the stuff gets here. So what you're basically asking the other side to do, the supplier to do, is to extend you additional credit and give you the stuff at the lower price, and then hold this kind of in limbo until it's decided whether or not you owe it or not. But right now, it's owed. So, I would argue, if I'm representing a supplier, pay it or else you're not going to get your stuff. And then if I owe you money back, then we can discuss it later.
last question under Jack theory speculation. I've got construction in progress. So, I went to the bank, I'm going on a commercial real estate project, doing it residential too, but so it's me here, dear Gary.
Yeah.
And the bank underwrote the project under a certain set of facts. And typically what happens is I've got some form of commitment letter with construction draw schedule with a finite amount associated with it. And now I have a cost overrun that most builders that I know have baked in by the way, if the material price changes, your price is changing. So what do you see speculating? What do you see banks doing? Stuff like that in this scenario, because otherwise, like if the bank wouldn't loan you more money to complete the project, then why do, given the dollar amounts of some of these projects, we add 25% material cost, which is generally going to be at least half, if not 3/4 of the actual completed construction costs. Like what are you going to assume?
And that's a very complicated question, and it depends. But really, if you boil it down, it comes down to two things with respect to the bank's position. They really have two choices. They either lend you more money to complete the project, or they allow their borrower to go into default, and then they get to own a partially completed project.
Which nobody
Which no banks do not. The whole foreclosures that happened back in 2008 and all those, banks don't want to own property. They want money. And they want to complete projects and create money flow in the form of payments and interest and everything else. And so that's why I think that, at least on the front end, lenders will be more amenable to modifying the arrangement. It may be extending the loan term. It may be lowering the interest rate so that they can lend more money, but the repayment amount is maybe not significantly higher commensurate with the amount of money that is the additional amount of money that's being borrowed. So those are really, it is an easy answer because the banks have two options.
Okay. Any questions from the gallery here or online about the last 24-hour news? We knew tariffs were coming, lots of speculation, but April 2nd came after April Fools. April Fools, by the way, is one of my favorite days. If you didn't know. Sorry, team.
Well, that's why the tariffs started today.
Right. Yeah,
exactly.
Yeah, he didn't want to do it on April 1st because nobody did. Anyway, any questions on that? Just picking one from the archive. Anyone here still waiting on ERC money? Anybody? Two people? You want to give an update on that? Adam?
Yeah, that's a accounting thing.
One of them actually started to receive a notice that there might be a check coming. So that's a general positive item, given that there have been some force reductions in the IRS. So we're going to keep the fingers crossed on that.
All right. Do you think that his answer was true or false?
We're not
All right. So I think I saw Scott Upton. Scott, did you?
You put him on the spot again.
Yeah.
Okay.
So Scott, here's the question, and we may need to take a mic out to it then. Thank you very much, first of all, for being on webinar a week or so ago, talking about what's happening with private equity, lots of money sitting out there. First of all, but thank you for being on it because I had a lot of people tell me that that was quite informative. And a large doctor group will remain unnamed asked, since they were all doing surgeries that day, they couldn't be on it, so we graciously sent them a link to it, and they found that to be quite helpful. So anything from your perspective on the PE world and ripple effect on these tariffs, or from these tariffs?
Well, You know, we're not seeing it yet. I mean, as I said last week, the market is still very slow. I mean, there's transactions happening. You are in part of between. We haven't seen the full effects of it yet. I mean, we haven't seen how it's going to affect these manufacturing companies and some of these other service companies. So we'll see when they start to hit up. My guess is probably 6 to 9 months down the road when we start to really see this ripple effect happening. I think what you got with this uncertainty in the MA one is what I was talking about last week. No one's really doing anything because of the uncertainty in the market. There's just another degree of uncertainty.
Yeah, I think to Scott's point, you know, I'm just thinking through a typical transaction for manufacturing companies. Talking about one of Jack and I's favorite topics is always what is the working capital target? You know, and in a manufacturing company, a component of that, the couple places where they're always diving is, well, what's your cost of goods sold? Like, what's that cost of goods sold percentage? And they're also looking at a working capital target, which is going to be receivables and inventory, including kind of your work in process and finished goods inventory, less your trade payables. And you know, most, like every client that we have right now has inventory, but it's at a price that doesn't include a tariff. You know, so like even if they had, you know, a couple months of inventory, it's going to take in their systems a couple months for that to burn off, and then see if the tariffs are still here, and increase price, you know, increase the inventory number, increase cost to get sold. And then the big modeling question is going to be, well, how much of that, you know, did you absorb versus how much of that did you absorb from a customer perspective? But you know, that is like to Scott's point. I mean, you're not going to see it show up this minute in anything other than I now have a bill due when something is short. You know, but most of what, I think I've never calculated like what's the average inventory value with our client base in terms of how many months on hand they had. But every time I meet with them, I always tell them that they have too much. So generally, most of my clients here in manufacturing usually have about 3 to 4 months, which is still excessive in my opinion, but they feel good about it. So it's going to take 3 to 4 months for them to burn off before they start to see the impact, even if the replenishments right now are requiring more cash out the door to get the replenishments. Most of our clients sell inventory on a first in, first out basis. So it's the stuff that doesn't have a tariff that's going to be the stuff that is still in their financial statements today that they're reporting
For that. Yeah. So, yeah, not to panic people, but it does throw a bit of chaos, as Adam said, for example, on a letter of intent, when you're measuring out working capital and putting benchmarks potentially based on a buyer's review of the, you know, the financials. But it also, on the back end, creates a lot of problems. So you see in dealing with part of the uncertainty with buyers, what they're doing, and I'm seeing more of this in the first quarter, is they're pushing purchase price money into earnouts. And earnouts are derivative of earnings, EBITDA. And so, and you reach certain EBITDA targets, but that again has a lot of assumptions built into it, which is, you know, earnings. Okay, what is the cost to produce or goods and services, and what are you going to make? What are you going to charge? And it's based upon history. And we're in a new chapter of unwritten history on the impact. And we can go back to when, you know, in prior
All these
years.
smooth tariffs.
Yes, that's the wow, 4 times. All right.
I'm going to get 5 or 6.
All
And that's
right.
how we're done.
Excellent. You guys have to drink every time he says that, by the way. And so it does create uncertainty in putting these things together to a point where, let's say, hypothetical law firm and lawyer are working on a deal, and they may slow roll it a little bit more than they might otherwise do to see how things are going to turn out. Because let's say that hypothetical letter of intent has an earn-out provision in it. And so you want to give your client the benefit of kind of figuring stuff out, but also trying to be creative and being fair to a buyer and not have them, in fact, when going through this particular transaction, the buyer came back and said, why is it our responsibility to deal with market changes? And I went back and said, okay, well, what is your proposal to equitably deal with that? Because he didn't come back and say, okay, and so let's do it this way. Basically said, not our problem. And I was already saying not our problem as well. So we'll figure it out. But it's, both sides are in uncharted territory.
Okay. We've been talking about tariffs. How do I prepare? One thing that was interesting, so just so you know, BGW is moving offices. We're excited. And we're moving it to Savannah Mill on the west side, so pretty well west areas. Cool, 33 campus on the Greenway, old mill, 100 plus years old. And we're the first commercial tenant in it, and they've got apartment communities around it. Very cool. But this whole tariff thing hit us last week as we do weekly calls with the architects because it's a shell that we're moving in on the first floor. And working with the architects and builders, Unblock is the builder, architects, Redline, we really like both of those guys a lot. And then Playbook, Mike Grippo's company has been really helping with project management for us. So we've got a really incredible team. Also, shout out to Newmark. They've been really great. McCoy is our commercial real estate guy. But Wyatt, in the honor of Unblock, said, hey, by the way, we've got about $16,000 already in piping and electrical type things, and plumbing, but more electrical conduit and stuff like that, that we need to get this thing signed now. Because they said, careful weekly stuff. And so one of the things that I have seen with Playbook that has been really great is they are going through, and so is Wyatt and Blomblog, they are pushing back on suppliers to make sure that there's not gouging that's going on. Because we saw that with, when lumber was getting crazy out of whack, fuel surcharges when, 4 years ago, gas prices started really rising rapidly. And I saw it happen with manufacturers that are friends of mine where they had to be hitting these fuel surcharges. And we also know people that were padding their own pockets under the guise of fuel surcharges so that they could increase the profits. So any words of wisdom on just looking at contracts and that kind of stuff for guard and stuff like that?
Yeah, I mentioned it previously, but look at your contracts and the terms and the renewal points. So you're going to see there's various ways to renew a contract. One is, okay, negative notice, where if you don't give, and it's also called an evergreen provision, where if you don't say so, then it automatically renews, or whatever the period of time is, whether it's annual, 5 years, whatever it may be. Then there are others that say if you need to provide notice within 3 months or so prior to the end of the contract, and then you either renew the contract terms as they are, or you negotiate additional terms or different terms potentially. And sometimes you have an escalator on cost and things like that based upon, cost of living increases, et cetera. So, but I would say take a look at things that you may know are going to happen down the road. So let's say you've been pushing off a roof repair for your building, or maybe you've been pushing off buying or upgrading certain equipment. I gave the personal example last week or 2 weeks ago that, yay us, and shout out to my wife who's watching, that we had, this is my therapy. She knows that I use this as therapy for things. So we had to buy an air conditioning unit, and not just the air handler, the entire thing. And one of the sale
That's
points,
the way it always is.
yeah, it always, right. At least it happened now, not when it's 100 degrees outside, because it was doomed to fail when that happened. That it one of the sale points that I hadn't thought about was, and they're very creative. They said, well, with all the tariffs and stuff that are coming, and actually, I think I said she used the word inflation, but she meant tariffs. She also meant inflation, but tariffs that are coming, we haven't adjusted our price book yet. So you need to get in while it's good before we raise prices. And, normally I react to that like, okay, that's BS and trying to upsell and pressure and bully me into doing something. It's a situation where they had me cornered. I had no choice. But it was, it's true. So, put that in your personal life, in your business life. What are things that you might be able to do now at the price structures that are in place before? Because I don't, there are some clients that are anticipatorily raising their prices just in case, but that's not good for competition when their competitors are not doing that. They're shopping around. So most are hesitating and waiting. But then I thought it was pretty creative that they were using that hesitation as a marketing sales tool to get me to complete a purchase.
Pressure.
So I got another question for you, Jack. What can I do as a business owner to protect my personal assets if I get sued in my business?
Okay, so fundamental entity formation 101. The reasons why we form entities is to basically, if you look at the world, personal and business in 4 quadrants, and you have personal assets and liabilities and business assets and liabilities. And what you're doing is making sure that there isn't a diagonal that is created tic-tac-toe, just only with 2 points though, between your personal assets and business liabilities and your business assets and your personal liabilities. Did I say that right? So, yeah, okay. So crisscrossing, you want to protect your personal assets from things that happen in your business, and you want to protect your business assets from things that happen in your business life. Unfortunately, we can't do that in every instance. And I tell people, clients, that there are 4 instances that I see when you're going to purposefully cross that line. First is when you're dealing with the landlord in the lease. You're going to sign a personal guarantee with the landlord. Secondly, with a bank, you're going to sign a personal guarantee with the bank. Third is a franchise. Your franchisor is always going to make you sign a personal guarantee, and many times have your spouse, even if they're not involved in the business, sign a personal guarantee. And the fourth time is when you're signing our engagement letter, you're definitely going to be on the hook, and I'm not going to go try to get a bill paid by an entity that goes out of business. So those are the 4 situations. And so what you try to do is avoid those crisscrossing so that when someone has a lawsuit or a claim against the business, that you're not exposing your house, your car, and everything else. One little piece of guidance is that many times,
Not advice, right?
not advice, never, is that, although I have clients in the room, so I guess it could be advice. So yeah, if you're a client, then you can take this as advice. The what you can do inadvertently is, let's say you have a business transaction, and let's say it's a supplier that wants you to sign a personal guarantee, and you're like, okay, and they're smart and they want you, your spouse, let's say it's a small business owned by a few people. They say, we're going to extend you this $1 million line of credit, but you and your business partners and everyone's spouses have to sign up on this. What you've done, inadvertently maybe, is basically giving up your house as collateral. Whereas if your spouse doesn't sign that personal guarantee, they're not online personally. And in most cases, you're protected under North Carolina law and many other laws, many other state laws, where that creditor can put a lien on your house, but they can't cause a foreclosure. They can't get the equity, half of the equity out of the house. But if that's why when I represent landlords, when I represent franchisors, if there is someone who is married, they are going to sign a personal guarantee, because I don't want to have to deal with, okay, well, we can only put a lien on, and their biggest asset is the house, or that the house, the car, and all the other assets are in the spouse's name. And then, you're really not collateralized. You've been duped. So,
Following up on that, sometimes we get asked, hey, the ship appears to be sinking, Jack. Should I be considering bankruptcy or not. And I know you don't that your area of expertise, so you just play a bankruptcy attorney on TV. Kind of the advice that I usually give is like, hey, unless you know, like you pissed off 3 creditors so bad or whatever it is to force that they're gonna, combine together, just ride it out. So can you kind of walk through like, if you were in that position, since we're talking about asset protection, if you're walking through that decision framework, like when would you pursue protection versus when would you just say, good luck, you'll get paid when you get paid, stop throwing a fit? Just asking for a friend.
No, that's always right. In my younger years, I did do some bankruptcy work and on the creditor side, and we have a very strong creditors group. In fact, one of my colleagues is here, or was here a few moments ago, who's in that group. Where'd she go? Okay. So I'm going to do it from 2 perspectives. From the creditor's perspective, if you're owed money, so it's called a preference period, and it's 90 days. So I am a creditor and you owe me money. I want to get money from you as soon as possible, because if you file bankruptcy and I've received payment from you within 90 days prior to the bankruptcy, I have to give all that money back to the trustee. It gets put into a pool, and then it's decided who gets that money, whether it's 30 cents on the dollar. And then the secured creditors actually get to grab at that pool first. But if you're beyond that 90th day, then you're okay, unless there's other reasons for that. So from the creditor's perspective, get paid as much as you can, as soon as you can. From the debtor's perspective, from the company's perspective, if you think you're going towards the bankruptcy route, maybe delay payments or pay or negotiate that and see. But your question really is, when and if you pull the trigger on a bankruptcy, or do you tell your creditors to pound sand? Which is, it depends. And it depends upon, do you think that you're going to be able to get out of bankruptcy, and you just need a little bit of relief and pressure and stress off of your back in order to be fair to creditors and kind of restart. And because really, the bankruptcy process is more of an equitable process. At least I've always thought that, which is a way for someone who got themselves into financial trouble to basically ask for grace and mercy to say, okay, let me try to be fair to people who have been fair to me, more than fair to me, by extending me credit, not paying them 100 cents on the dollar, but hopefully the maintaining of the business moving forward is an economic stimulus and keeps jobs and everything else. So that's kind of the equity side of things. But if filing bankruptcy, personal or business, is not a fun thing. You end up with a black mark on your business soul for a long period of time. I think it's 7 years, right, Julia? 7 years for like the black mark. Okay. And so, those are the things. I need to put you on the spot. And so, tread lightly, but yes, you can tell creditors to, and they will continue to push on you. They'll send collection companies after you. And that's when you kind of know when you have a lot of collection companies coming after you, because they have, little stake in the game, meaning little expense. These collection companies are mills that are just processing this. They'll file a lawsuit like nothing. And then you're in the middle of a lawsuit and to make things worse. So anyway, I don't know if I answered your question directly or indirectly.
When do you, I guess at what point do you feel like, hey, this is sort of unrecoverable, let's go down this route, versus no, I'm just gonna suck it, you'll get paid when you get paid. Is there kind of a tipping point that you see makes sense for people versus riding out? I mean, my gut feeling would be like, hey, if I had the bank a bulk load of money and I saw no way that was ever going to get repaid, I'd probably consider it. But if I just had typical trade payables with a line of credit, I'd say,
yeah. And it again depends on your business situation. So if you owe a lot of people a lot of money in the dollar amounts, but I would say, don't do only a self-assessment, and you need to have outsiders help you through this who can see see the jar from the outside and be able to say, okay, well, I see what you're saying, but there are companies out there that will help you restructure. There are companies out there that will help you, get a CFO, a fractional CFO in to help you and figure out, okay, can we cut, because we've talked about this a lot about cutting expenses and things that are, not to rewind the tape a little bit, where we talked about you have these subscriptions or these things that are just going from year to year to year. Can you cut a little bit of the fat? Can you reduce some costs? Are there ways to increase marginal revenue? So that way you can, and then put together a plan outside of bankruptcy to deal with these creditors and get them on board and get them with standstill agreements and those kind of things. So formalize it that way.
All right, Dan Flaherty, are you in here? Yeah, all right, good. All right, question.
What's the theoretical timing that's supposed to take place? Kind of like there used to be a theoretical timing it's going to take place with trickle down. They never quite did. But what is the theoretical timing that should take place that we get back to stability if it all works as it's supposed to? So there's, I think, a few different windows, Mark. Window one would be, Japan be nice to us, kind of that window. Like you lower yours and I'll lower mine. While I haven't heard it said out loud, I'm thinking they're thinking that's like months, not years to kind of see how that plays out. That's area number one. I think area number two is kind of the, hey, Mark, I know this tax kind of sucks, but we're going to extend the tax cut for you. So that's sort of like giving you money, so maybe it'll make the medicine go down a little bit smoother, for you, which is the, hey, you may have to pay more in goods, but we're going to do a tax cut for you that'll hopefully offset that. But it's also going to be months, because they need to pass an extension of the Tax Cuts and Jobs Act, on the assumption that the Republicans may lose the House and not be able to pass it. So like immigration reform and tax cuts were like the two big things that need to try to get done. I think the problem with that way of thinking is that implies that there's currently a higher rate that will be reduced. But that's not true. It's just an extension of the rates that are already in existence with maybe a couple little benefits on the margins around depreciation expense and stuff like that. So in that case, it's more like, well, Mark, you were going to have to pay more taxes. But now you're not going to. But now you have to pay more in goods, which, that to me is just an implicit tax, not an explicit tax. I think the last piece about the manufacturing thing, I mean, that is going to be, years for that to come online. But what's interesting about that one in particular, since I, play a policy wonk on TV too, is that how it ties back to immigration itself is that the under Clinton there was also a lot of pressure to do something about immigration. So he assembled a committee, chaired by a congresswoman from a former congresswoman from Texas to say, hey, what's your recommendation? And the end answer was actually not too dissimilar to what you hear people talking about today, which is, at the end of the day, like I like paying lower costs, for stuff, but at the same time, low skilled labor has had a negative impact, on lower to middle income people, because it's just kind of kept wages depressed at that level. We're benefiting from paying lower prices for stuff, but it has had an impact. So, kind of the theory of, hey, maybe this will help, low to middle incomes is a sound, theory. It's just kind of a painful way to get there, because it's one of those things where, like, if I go to Jack, I don't even know what political party Jack is, but if I say, hey, don't you think that the middle class ought to make more money? Jack's probably going to say, yeah, no, that makes sense to me. And I say, cool. I'm going to need you to pay $500 a month for that for the next 10 years. Jack's going to say, what you talking about? Okay. No, I said that was a good idea. I didn't say I wanted to do anything.
Y'all.
I just wanted that.
Y'all.
I wanted that to magically happen for the rich to do that. You know, not me. Well, who's the rich? Not me. You know, above me. That's who they are. So, you know, kind of who knows on that. That's my general thought process, is that I don't, my belief is we're going to see the impact flesh out pretty soon. And if it looks like it's going significantly sideways, my speculation would be similar to the legal settlements where we're getting free pro bono work. It's going to be, hey, what can we do that gets a win on the board that otherwise makes this all kind of go away? It's just my own theory.
Okay, first, Angelica, if you'll go give Mark whatever he wants, including the whiskey kit, if he wants. I told you there were good prizes. Waited until 11:50 to ask the first question, so let him pick whatever he wants. Secondly, I'm not meaning to be rude. I'm just listening to a live feed in my ear to make sure that we're doing okay. But I would also add that part of the problem of knowing when things will get normalized, whatever that means, is the retaliatory nature of what's going on. And so, you know, you listen to some, the tariffs that are imposed are in excess of what's being imposed on us. In other cases, it is a fraction of what is being imposed upon us. And so, and then you have the threat of just going totally ballistic on everything. And then you have the pulling back of the actual tariffs that are going to be imposed. I mean, yesterday or day before yesterday was, I think, an exception to where things were previously, which was the threat and just kind of testing the waters to see. I mean, yesterday was a ballistic missile that was fired into the world economy. So until we see the results of that, then we really won't know kind of where things are going to normalize, and then seeing the impacts on our bottom lines as a business, because it is essentially, so I hadn't really thought about that until you said it, which is a swap of, okay, paying higher costs to produce the goods, and that ends up being all part of, well, you're paying additional tariffs and taxes and everything else. And will the goal of, made in America bring jobs to manufacturing? That's why I said, and I can't remember the statistics that I heard, but okay, what are the anticipated statistics of the increase in manufacturing in the United States versus what's going on in other countries, including China? And then you hear about China and Japan now in this, kind of survivor alliance, or trying to put together this alliance to deal with us, the United States, too. So it's just, there's a lot of things to talk about. I don't think we'll have any lack of things to talk about for 251. But
yeah,
I think we got to watch.
In fairness, they did do this for us. We do have little listeners that are out there, and they're like, man, you guys are getting stale. I know what we'll do. We'll change crap. Ray, you had a question?
Jake.
Yeah, no. Now you're getting into the Elon Musk cowboy kids. Right. Yeah. In all seriousness, like, I've actually. Yeah. No, I've had the same question about, well, we're sort of at record low unemployment, to the point where it's almost reached unemployable levels. Our birth rate isn't increasing, and we're just deporting all the unskilled labor. So, like, I've had the same questions around. It's an interesting theory, and I can buy into the long-term piece of that, but who will actually do the job? meaning like if I'm currently working in the Amazon warehouse, because that was a good paying job, but then the manufacturing facility opens up and that's an even better paying job. So I quit the Amazon job and then go work at the factory. There's not necessarily a ready replacement for the Amazon job at this point with the unemployment levels that we're at. So it's a good point that I've wondered about myself. Okay. I don't need an endoscopy. It's a good question. I have the same question myself.
All right, we've got a question on the chat. Jack.
Yes. And actually, Ben, did you run just for the last few minutes? Yeah. Okay. Thank you. All right. So this is from an anonymous attendee, and it says, "What if you use your personal car in business or business car personally and get in an accident and someone dies? Would that cause exposure to both personal and business assets in each instant?" So again, it depends. I mean, I think that in most cases, the driver of the vehicle is responsible for that person's driving, regardless of who owns the vehicle. Now, you get into the next level of scrutiny when it is the person who's driving, maybe goes to lunch, has too much to drink, is driving back to go to the next job or something along those lines, and then gets in an accident. Or is, leaving a job site and going home, gets in an accident. That happens many times when you have a vehicle that's wrapped with the company, a truck or something along those lines. And so the answer is that, again, driver's responsibility. The employer can have some responsibility, but a lot of times the employer should have insurance for those kind of things if they have motor vehicles. And then what will end up happening, I think, practically is there will be an issue between the driver's insurance company and the company's insurance company and the victim's insurance company that all comes together. So, it's if it's yourself that is driving the vehicle and gets into an accident, and obviously, it doesn't matter if you are driving it for a business purpose or not, or it's wrapped or not, you're still going to be responsible for it.
All right, coming up towards the end of the hour. And Dan Flaherty, I want you to be thinking about this question. Can we get a mic back to him? Adam, I want you to weigh in on this one too. But everybody in uncertainty, one of the best things that you can do is increase sales. Like cash flow matters. Hiring salespeople and good ones is another thing. So the question, and this is one of the things that we had dealt with in the last year, is how can I, discern between I need a salesperson, they talk a great game, but how do I know I'm not going to get it done?
Yeah, I think I'll let Dan answer the question since it's his area of expertise, but the subject is actually a hotbed for me, especially as we're talking about tariffs, because, some joker is going to thump their chest now and say,
At 25% sales growth, Gary.
what are you talking about? I have a sales problem. And actually did not add a single customer. Instead, they've just passed through price increases on the customer. So if you just look at the accounting industry in general, it's had a record growth rate over the last couple of years, which, don't laugh at this, but the record growth rate is 8.5%. That's pretty much, which sounds pretty good. And at the same time, I can say that my staff salaries are going to, by more than that, just due to inflation. And that 8.5% for the most part in most CBA firms has simply just been a cost increase, like a cost pass-through increase in terms of like actually looking at what were net new customers. It's like I think I maybe have like one last year. Yeah, like it's not anything reasonable, but with this in place, especially you start talking about a substitution effect of price increases in tariffs, like I better get my crap together in terms of like actually remembering how to add new customers.
Yeah.
You know, because now this really gonna matter. So there you go, Dan. Question to you.
Yeah. Okay. I have another, I think, double whammy is if you pay them commission on that non-volume growth.
Yeah.
Yeah. But Gary, to answer your question, I mean, unfortunately, in my experience, you had to have had a high of 50 to 100 bets people, and then figure out what did I miss, right? When I boiled it down over my career, salespeople are going to do a really good job in here, right? Like that's their role, that's the game sometimes that they're playing. The trick I've used, and I read recently too, Elon Musk used to do this when he was hiring engineers, is just peel that onion back. At some point, if they're smoking mirrors a little bit, when you start asking detail, you're going to catch it.
Oh, sorry about that.
So that's my suggestion, you know, on how. Gary, can I just say one point? I thought actually where you were going to go.
Yeah.
And that sounds great. There's been a lot of, I think, questions that we've received here recently because Joe is absolutely cunning in the SBA and some of the organizations that give incentives to small business owners. So everybody got some question right now, are grants, right? Are they being cut? And the answer so far is absolutely not. We had a manufacturer in Statesville and the manufacturer in Warsaw just last week. They were building, expanding, the capital's been allocated, they've already started spending. So normally you wouldn't receive public funds if the project's already started, right? And these manufacturing grants stepped right in and funded both projects. So just last week, 2 for 2. And this is Dan speculating here, but I think the types of grant programs that are very unknown are sniper approaches that address job creation, job retention, bringing manufacturing jobs to America, competing against foreign competition. Those are 100% aligned with the agenda today and the policy, right? So that's Dan speculating on why they still exist, but anything through the SBA right now, we've seen a complete slowdown on, and it's unknown as to the future of any SBA incentives. But I just want to get the latest and greatest there, right, over the last few weeks on what we've seen.
Yeah, that's really good. I know that we've hit goal of 3, so I want to honor you guys this time. And everybody online, thank you guys for joining us online. Hopefully this was fun. Next week will be 251. We'll be back, not live, but well, hopefully we're live. But not with a studio audience. But feel free to hit us up with questions in the meantime. My email is gfrey@trustbgw.com. Hit us up and try to make sure that we do answer your questions and not give you advice, but give you insights.
Yes.
All right. Just kind of make sure that I'm not getting sued. And thank you guys for joining us. Dan, thank you. We'll have you guys, we got when I look back on the brain trust in here, we could go on for hours and days. We will. That is true. But seriously, the subject matter expertise in here is really amazing. And so we want to make sure that we are asking you guys for advice and expertise to bring back to the greater community. So that's really what the bottom line is. That's what we're trying to do, is help the community. So thank you for your time. Thank you for joining us. Make sure you get some of those Dunkin' Donuts.
Yeah, nobody
rolls.
leave in the room. Leave yet.
It-
We're gonna shut this off.
Okay.
Talk to them.
Okay, so we're signing off online, but Jack has something special for the.
Yeah, I just don't want to make them jealous of
yeah.
all the stuff that they're
Oh.
missing out on because they don't show up.
Well, tell them. Make them come next time.
Oh, we got a ton of stuff. You guys are missing out. You should have stayed. You should have come.
Yeah, well, some of them can't because we've had crazy shirts in Hawaii on here all the time on Honolulu because we helped them so much during PPP. So that was awesome. So anyway, thank you guys. And thank you again, Kara, the team. Also, thank you to Alpha Graphics, Adam Rukowski. He did a great job on these. That was pretty fun. And the reason that we're wearing DunKings, this was Kara Tadio's idea for the 200th anniversary. She's from Boston. And so she thought that was fun. So we went along. So that is why. My wife looked at me today going, "What are you doing? Where are you going?" I said, "We're going to do a show." Like that? Yeah. Don't ask. All right, guys. Have a good day. All right. I will